When we're stuck in a range like this on the markets, you know something big is just about to happen. And with non-farm payrolls coming out this Friday, there's a lot to discuss. We'll be talking about our technical analysis levels for the SP 500, Nasdaq, Bitcoin, Tesla, gold, silver, and more throughout today's video. And there's just so much to unpack, guys, and some great learning for you out there. Stay tuned. All right, well, here begins our recap of the markets closed 4th of August 2021. And when we look at a heat map of the large companies in the S&P 500, a few things come to mind. Number one, AMD and semiconductors were up pretty heavily. The retail market, similar to the January period, is taking over certain stocks. We have Robinhood that is, making massive gains off retail herd, really putting pressure on that with calls and, of course, squeezes across the board. We've got AMD moving up heavily with huge amounts of buying going on. And we have a few other select stocks that are moving. But it isn't the whole market. You'll notice energy, financials, consumer defensives, restaurants, travel, all of these things were down in the session. And I think this is really important to note. The market doesn't look as healthy as you would think. It's very specific stocks that are popping off, including tech. Let's now have a look at some of the reasons why that could be. Well, we had the US dollar ADP non-farm employment change prelim figures, and they came in bad. 330K with the expectation of 695K. So that's a big miss there on this number. This puts even more emphasis on the Friday non-farms. And if you're not sure when they're coming out, it's going to be at 8:30 a.m. Eastern time. So that's New York time. And we'll be live streaming it here on the channel. So remember, subscribe, hit that like button, and join us for that event. It's going to be a cracker, and I expect quite a lot of volatility to come off that event. So there's so much different bits of information going through. One of those was really what hit up gold yesterday, and that was the gold prices got slammed, and so did silver, after the US Federal Reserve official signaled the possibility of bringing forward policy tightening. Now, we've been talking about tapering from the Fed, and this is basically the big thing. If they take away stimulus, of course, that will shock the markets. That will also put pressure on things like gold, things like, of course, silver, as the dollar index will rise. Now, are we sure that's going to happen? Well, we'll have to find out what's happening with these non-farm payroll marks. So I think this was more of a kind of like flushing out off large moves that had occurred, creating volatility, and really it comes down to the jobs numbers on Friday. That's why it's such an important event, and we'll have to be watching it incredibly closely. So when we actually take a look at the market closes yesterday, you'll notice tech closed 0.15% up, but we had some big movements down. SP500, of course, down 0.46, Dow Jones down 0.92, and IWM, the small cap companies, while starting good in the morning, ended down 1.25%. So that's a big move there. And that just shows you the power of these financials really taking a bit of a beating, and of course, energy stocks. So energy was down the most. Then we had financials down 0.84%, industrials down, even consumer staples wasn't safe, and biotechnology really came alive. That's certainly one of the markets with semiconductors right now that are looking a lot better than the rest of the market. So worthwhile watching those. We have been doing that on the live channel and just checking it out. Now let's get into the technical analysis, and straight away you'll see here the dollar index is the one that people are starting to watch. Have we broken through a key resistance? Well, look, 92.20 definitely was a scalp target because you're getting through all the previous wicks and you're moving into the 20 moving average. Now the 20 moving average on the daily is no slouch. It's a very important area, and I expect the dollar index to really kind of slow down here a little bit and try to find some consolidation, you would think, ahead of the non-farm employment change numbers. The market moved swiftly. When we go to a 5-minute chart and we refresh this here, you can see the difference. It was going very, very negative after the bad jobs numbers, and then all of a sudden we got that switch, and that caused a massive spike in the dollar index. So this spike was so huge, it really put pressure on all sorts of things, including the 10-year, including gold, including silver. If we move over to the 10-year, that created a long leg doji. We know what long leg dojis means here, don't we, on the channel? If it closed above, decision made. We see some bullishness into the 20 exponential on the daily. If it closes below, I believe the 10-year will go down to the 1.03 number. And that will actually put a lot of pressure on the banks. It might even bring that JP Morgan head and shoulders through to fruition. And of course, it'll put a lot of pressure on the Russell 2000. So this will be something that we continue to watch throughout the next coming weeks. And of course, through the Friday session and Thursday session. Let's have a look here at gold. So gold spiked up hard. And for anyone that trades and looks at these levels, look, this is a classic case of a key level being hit and actually fully reversing against it. It just shows that locking in profit at key zones can be really, really important. So we definitely got bullish here on gold around that 1816, 1817 zone. It quickly rallied to the 1830, which has been consistently a really great area. Now, whether you scale out all of it or you scale a portion off here, this was a clear zone. We'll talk about the silver zone first. And then if you have grander plans, then you can always leave some of the trade on. Remember, scaling is one of the big keys here to trading and investing. Will you have been stopped out by now on gold? Depends whether you had your stop under here, or under here. But all of those levels are very, very valid. And at this stage, we've just seen 1830 get hit, a huge reversal due to all that news we're talking about. And it's going to be a little bit unstable, I think, coming into the non-farms. Expect explosive action coming out of silver, dollar index, and of course gold after the non-farm payrolls examples, or the non-farm payrolls numbers come out. If we have a look here at silver as well, look at this trend line. So the trend line that we had drawn for quite some time got reached and hit yesterday. We also saw the 50 exponential get hit. Now we had plans to the 2640. That is definitely the longer term, but 26 was always going to be a good zone. I mentioned this during the live stream as we actually saw it hit during the live stream, and I mentioned first take profit zone. Again, scaling comes out to play here. Would most people stop losses still be in? I would assume so if you were going for the longer kind of flag play here. But yeah, a lot of pressure coming under silver and gold, and 26 was just about hit, and obviously you'd want to have it just slightly underneath the round number. Always slightly underneath, it tends to save the day. That's trading for you. You've got to be sneaky, like Sneaky Wall Street is. You've got to be a little bit more sneaky if possible. Think about those types of things. We'll move over to our Tesla and stock market analysis now. Straight away, I noticed Tesla here, and I think, you know what, this is very disappointing. Tesla should have rallied. It's clear that the retail community is not getting behind this like they are on AMD, like they are on Hood and other. Their money is diverted somewhere else. If we close above now because of this rejection candle we saw yesterday on Tesla, this will be incredibly significant, and I would think we move towards that 1780 zone. But we're still holding above 690. We're still holding above the 700. Even with this big pin bar that happens yesterday, we don't think that weakness is definitely ensuing. We just hope now that we get above this zone, because once you get above this zone, you activate a lot of day traders, you activate that positive momentum, and that brings through the goods. This is the plan at this stage. It's above, but we're not seeing great price action here on Tesla, and we'll come back to that and we'll check it out over the next coming days. Let's move over to the market. So firstly, I said this at the start of the video, range bound, range bound, range bound. Does it get any better than this in terms of being able to really recognize on the SP 500 a key zone? And we have two key zones. We've got that 43, 70, 43, kind of 74 zone here as support. We saw that get hit recently in the start of the week. And then we've got that 44.30. Now we have two key zones. We don't know where the market's going to go at this stage. It's definitely neutralized across a whole bunch of different things. But from the perspective of the smaller time frame here, we've got a peak, we have a trough, we have a lower peak. Will we see a lower trough in the Thursday session and further weakness putting pressure on the 43.70? A close either way should go the distance of the channel, and that will then put pressure on the bull or the bear side. Look, we're neutralized. Strong uptrends been pursuing for quite a few months, but we've always got to realize the price action is telling us here something, and it's saying we're waiting for the non-farm payrolls numbers. And when we find those out, we're going to look to crack a zone. You would think it's going to be either at the resistance or the support ahead of that kind of event. That's generally the way that the markets go. We'll move over to the IWM, the Russell 2000, further weakness here as the banks got hit up a little bit there through the session. If we do see a close underneath this last low, that should really signal further selling pressure. Possibly that sell pressure comes through on the Thursday session. We see weakness, of course, in the Russell. That's often also a precursor to weakness across the board. It all starts with the small companies. It all starts with a rollover in commodities, things like oil, things like, of course, the copper and all of those types of ones start to roll over. And when you take a look at copper or any of these metals right now, they're not exactly looking super healthy. You can see it came down off the resistance. It's on like around that support. And if it continues to weaken here, all of a sudden we're talking about weakness in copper, weakness in several commodities, and that leads again to more of a bear case than a bull case at this stage. The other one that we've been watching is JP Morgan. We've been talking about this head and shoulders for a while. Nothing's in play yet, but it's certainly struggling around here. Let's find out over the next coming days and weeks to whether JP Morgan can recover and if it does show bullishness or whether it does come back down to this 146 level. And when it gets here, if it closes below, well, I've said it a few times, head and shoulders is a very important style pattern, and this certainly is showing weakness forming in this market. And a lot of these kind of correction periods start with the financials, and then of course the tech companies we also expect to come down a little bit through that period if it does occur. Let's have a look at the QQQ. This is the Nasdaq for anyone that doesn't know. QQQ, yeah, I mean, it's floating around. I actually think it's harder to read the QQQ right now. If you were reading this, you would say, okay, we've got a bullish close here, followed by a little bit of bullish momentum. It's overall looking bullish. There's nothing wrong here, and it looks pretty good. And yeah, at this stage, we don't see any weakness. I mean, do you see weakness? I don't. I mean, I could put on a whole bunch of indicators and we'll find weakness across the board, I'm sure, on most of those indicators, but it's just not showing it yet. Now, will it show it? It's all going to come down to something like the SP 500 breaking above or below that little range, I feel. And that's when you'll start to see the real story play out here. We've got our trend line on the upper case here for the QQQ, and that's only now, in terms of percentage away, it's only about 1% away. So not very far at all. And that'll be something that we do look at. Dow Jones also kind of still stuck in the range on the 20 moving average here on the daily. We've got our longer term trend line. If we start breaching below that, of course, we know we're in trouble here across the market indices. And I expect all of these things to occur at the same time. You'll see the Dow come under pressure at the same time the SP 500 comes under pressure. And then, of course, you'll see the Russell, etc. They all link. We all know that. That's one thing that you want to understand about markets. They link up, and most of them will show very similar signals. It's just which one are you going to see to start the problem. You've got to find which market index is showing the problem. That's the one that will trigger, and then the rest will come with it. And that's the type of thing that you want to be always looking at when you're doing your analysis. When we move over to the crypto world here, and look, crypto is doing pretty well at the moment. We've seen BTC hit 42.5, which was our big resistance target. If you go on our Twitter, I've been posting a whole bunch of stuff there, or I've posted for quite some time our thought process here. And I still like what we're seeing here on Bitcoin. It's rallying a little bit. You'll notice this in gold that occurred. That's a good sign. It's looking good. The news is good. The Afterpay acquisition from Square is also good. I think all of this is pointing towards a stronger period for crypto over the longer term. However, we've still got government risks being the big kind of story here, and we'll have to see how that plays out. Technically speaking, it looks pretty okay. I think Ethereum is probably where most of the bigger discussions are at, you know, with the movement towards that 2850, which is what people want to see. If we go down to the 2 hour, you'll notice the previous resistances around that 26, 30, 40 zone. This is where I would like to see it rally and bounce off. We had great consolidation yesterday, a nice rally, instantly hit the resistance, and then started scaling through. So I'd be looking for it to go to 2850 ideally. That's pending all of the rest of the cryptos hold up. And yeah, Ethereum's looking strong, and there's a lot of positive momentum and positive stories coming out about forks, etc. for this coin. Thanks so much for watching. If you enjoyed the video, please remember to give us a like and of course subscribe, and come and join us 1 hour before the New York Stock Exchange Open. It's so much fun, guys, and we have the best community out there, and that's thanks to each and every one of you. See ya tomorrow. Bye for now.